I transferred, I turned it into this coin, which I then swapped with that coin, and then I did this, and I spun around 3 times and chanted, Candyman, and looked in the mirror, and boom, I made some money. Each one of those, from your perspective as the crypto trader, is, I traded 1 coin and I got 2 coins, and then I took these 2 coins and I got 4 coins, and I got these 4 coins, and I traded 1 coin. But
Jeff,
each one of those is a haircut.
I already solved this problem.
We need to hear from other Jeff. We need to hear from other Jeff, Taylor. What does other Jeff have to say?
Other Jeff says, just run it through a business, and then you can just have it. You can take all your losses at the end of the year and pay it out to yourself, whatever it is, as income, and don't worry about all that.
So they need to start a business, correct? Like an LLC or something like that.
Because it's legitimately his business.
I'm going to respectfully say maybe not, but we'll see. But yeah. But if that works out, but here's the point though, right now, at least for the majority of people listening that are active in crypto, are not running it through a business. They need to remember, if you back $10 worth of value, you owe taxes on that. And then when you
Jeff, I personally believe DeFi is engaging in a business, because
but what is the IRS believe?
You're offering your crypto to be used in the transaction. Like, that is what you're doing with DeFi.
Well, how do they treat it when I put my money in the bank and the bank, invests my money and pays me yield?
Exactly. It's the same thing. So the bank gets to use it and they get to write it off. Why wouldn't I be able to do it? They get to go to banks and go, oh, all this.
But you just answered your own question. You're not. So you get interest. You get a 1099 a year says, this is how much interest we paid you. Mm-hmm. Even if you took that interest and bought something else and then lost money on it, you still owe taxes on that.
Yeah, but Jeff, you are the bank in this situation. The bank takes your money, lends it out, uses your money to go do mortgages and everything, and then they pay you interest
on the profits they make.
What?
They still pay taxes on the profits they make.
Exactly. This is the same thing that you're doing when you're running your business. See, that's how I would do it.
Yeah, no, Taylor has a valid point. I'm
not saying he doesn't have a valid point in like the real world where common sense rules, but we're talking about the IRS.
We're talking about in the IRS world.
Yeah.
Well, my problem is if the IRS is going to take that position, then your argument back is, well, why do you do this with the banking industry? This is what the banking industry is doing. We're just doing the same thing that the banking industry is doing. We're allowing our money to be used in order for other people to make money off of it. I don't control that. I don't have an ability to go into those DeFi platforms and say, oh, don't lend to this person. I'm offering up the money. So in this situation, so my argument would be is when you're DeFiing, you're running a business, and that's how you should report it. But like Jeff's point though, we don't have anything from the IRS or Congress or anything on how we should do it. But there's just no way. There's no way even anybody, if an IRS agent showed up, he could calculate your taxes. There's no way he could sit down and figure it out because there's no information out there to show, okay, like you don't have access to the gas fees that were paid and exactly how much was at what time.
I mean, it's all on chain, but if there is no rules dictating, the rules of the road, then, how can they enforce a rule or a law? And that was the big issue that, during the XRP case, with the SEC,
they treat it as property,
they were arguing with the SEC saying, give us the rules, we'll follow the rules. And the SEC was like, there are rules, there's the Howey test. And, we're saying that, this is, how it is. But that the problem is that they haven't clarified what the rules are. And in the absence of that, it's, it's a slippery slope, so
the honest way to do it is you go at the end of the year and you look, did I make a profit or not?
Yeah.
And then I would argue that it's income, not capital gains.
And that's how I'm going to treat it.
It is income, anything related to. So this is what it says right here. I'm looking.
Why are you blurry,
Jeff? Right now, the IRS treats cryptocurrencies as property. So DeFi transactions, staking, liquidity pool rewards, token swaps are taxable events for an LLC as an individual. So that's all considered ordinary income, right? Now again, as long as you keep track of it all, it's fine.
Yeah.
But
the blockchain, keeps track of it, and your wallet keeps track of it, because every single transaction you make is logged, like in my Coinbase wallet, and I can download it at the end of the year and give it to my tax professional.
Yeah, this isn't as big a deal as people. I'm just stating that people need to remember it's taxable. That's really the bigger thing. They need to remember. I don't know why I'm out of focus, but they need to remember it's taxable. That's weird. I'm all blurred.
I know. Why are you all blurry, dude? Like, are you taking off your clothes or something? I think it thinks you're getting nude. Like,
Jeff
Jeff
is going interdimensional. He's phasing out into another dimension. Well, real quick, I've been there. We go. Perfect. That's a great shot right there. All right.
But he froze. Damn it.
Yeah, he did freeze.
Oh, there you are. You're back.
What's happening?
Yeah. You're back.
So I want to have you guys answer Victor's question, because he put it a little while ago, about 15 minutes ago, but I want to make sure we get to it. I'm thinking about rolling profits into a short-term rental and maybe save capital gains. Do you guys want to address this? Because I kind of feel like that we should.
Are you talking about, Damon, I got to go to a completely different picture now. Are we talking about, I saw that, when he says rolling into a short-term rental, are you saying like do a 1031 exchange? Because it's like...
No, I think what he's thinking is like, hey, I made these profits from my crypto. Now I'm going to go buy a rental property.
Mm-hmm.
And the problem with that is like, well...
That's still taxable.
Yeah. So if you're running it in an LLC,